Hello everybody, welcome to the Options Trading for Income weekly update for July 21st, 2015. Um, Unfortunately, we did a live webinar on Tuesday and I forgot to record it. So I am doing this for the purposes of putting a video on the blog so that everybody has a general idea what's going on. We had a very good discussion, a very long webinar Monday. Hopefully you were there, you got to see it. And again, I apologize for not getting that recorded. But like I said, we're going to have this here and we'll just quickly go through the relevant information with the positions and so forth. But before we do, we need to go through the disclaimer information, let you know that the presentation is for educational purposes only. We're not broker-dealers or financial advisors. We're not making any specific trade recommendations. Also, the risk of loss in trading options is substantial, so please be aware of all your risks prior to placing any trades. And also note that we do use hypothetical computer simulated trades and or results in the presentation. However, the results are believed to be as accurately represented as possible. If you're watching this on YouTube or some other venue, come on over to our website, check out our mailing list, get your free report, 7 Secrets to Become a Successful Trader. Sign up for this free weekly webinar. And make sure you check out our programs. We have the Super Simple Spread Trades, the M3, the Bearish Butterfly, the Rock, the M21, and now APM Squared is out. It has been released. Also, stay tuned for our programs currently under development. We have the Trading Triangle book coming out. We have an online Trading Triangle program, some directional spread trades. And also, as always, let us know how we can best serve you. One of the things that we are looking at putting together is some beginner courses to get you up to the level where you can get into super simple spreads, or even all the way up to an M3 type of trading system if you don't know how to do that already. Also, another thing we'd like to do is get some alternatives in for coaching in the form of either some sort of an online membership program or some sort of a group coaching thing that we would like to put together. If we do that, that may actually push back the Trading Triangle book a little bit further out. So in other words, we may put those programs ahead of that. But if you have anything, other suggestions, please let us know, and we'll do the best we can to get that straightened out for you. Also, if you have not sent in your results for the Hawaii Challenge 2016 for July, please do so. Shari at LockeInYourSuccess.com, and Shari will update those and update the web pages for us so that we can all see what's going on. All right, let's take a quick look at the markets here. We have, let me go back to a one-year chart. We have the NASDAQ, which broke out while we were away. A nice strong breakout here. It is the only index that broke out, but since it has, again, just so that you know, we're doing this webinar on Wednesday again, because not webinar, but this recording on Wednesday, because I did not record the Tuesday webinar. So anyway, we had the breakout. Since then, we had a retracement, which is normal. I would expect this to retrace to the 45.50 level. We're going to have to watch that level. If we get a breakdown of that level, it's going to be probably a fairly decent move down in the markets in general. However, I would expect us to hold the 45.50 level and to get a bounce up into the 48.35 level, which is all-time highs on the NASDAQ. That was a level that it topped out before the crash in the tech bubble burst, or they call it, in the 1990s. And even though all the other indices are at all-time highs, the NASDAQ is still trying to reach that level. And it's doing a good job because it's getting pretty close. If we look at the Russell, with the pullback in the NASDAQ, I was expecting this to come down and push into this what is to be a new expected trend line. Usually when we have a trend channel, we break that trend channel. Assuming the market is uptrending, which it is in general, we expect it to hold the new trend channel, which means the NASDAQ pulls down a little bit more, this might pull a little bit lower here and then bounce to at least back up into this 1300 area or 1295 or wherever it turned around here last time. So that's kind of what I'm expecting in the Russell now, is a general grind up. If we take, so that's generally what we expect with the markets. If we take a look at what went on with our positions, remember we did not have a trade update for July 13th because we had I was away at an NLP training seminar with Richard Bandler himself, the co-creator of NLP, as well as John and Kathleen Laval, who are the directors of the Society of NLP, which is the top organization for licensing NLP practitioners. And also Elvis Lester himself was there, who's a master hypnotist trainer, and he taught us a lot of good stuff with that. And we are looking forward to using all of this to help all of you become better traders, both through our one-on-one sessions or any kind of group session we may be coming up with in the future, and incorporating it in our programs, because one of the biggest things that I see with traders is they actually have the skills to become successful in the market. As a matter of fact, it doesn't really take a whole lot of skills to become successful in the market from a mechanical point of view, but from a mental point of view, it takes a lot to stay on your game and actually make money trading. It's very challenging, and of course, all of these technologies are very beneficial in doing that. They've helped me tremendously. I can tell you that for sure, as well as a lot of the successful traders that we have now. All right, let's push into our positions here. I'm going to show you first the bearish butterfly for July. So if we come back here, last update, Monday, July 6th, this is what the position looked like. By end of day, our deadlift limits were too high. Remember, we're in expiration guidelines here. So we went ahead and we sold off these two butterflies that we have up here at 1300. We added 10 butterflies at 1240. If we move ahead a half an hour, and we sold 5 of these of 1280 butterflies, put us at a little bit flatter than normal when I do an adjustment here, but I think when I actually did it, it was closer to the 200 level. But anyway, here is what we ended up with. Notice we are over capital limits here, which happens if we're like 3/3 entered, close to expiration, and low volatility, which is pretty much what we got going on here. Easy ways to correct this, but again, this is very beginner, basic bearish butterfly within program rules. So we let it go over capital limits in the program, but again, that's easily fixable. So this is what we looked like as of Monday. Tuesday, there were no adjustments. Wednesday, we had to make some corrections. So let's go into Wednesdays. Again, I did not do any intraday adjustments here, although they are allowed in the bearish butterfly in expiration guidelines. So here we are positive 708 delta again, which is significantly over, which is going to prompt us to sell off these 1280 butterflies and buy butterflies down here at 1220. So let's put this to 1530. We'll show you that we're now fully entered 3/3 into the bearish butterfly here. We have a position that looks like this. If we continue to move forward here, we go to Thursday. I don't think anything was needed on Thursday. Again, we're getting chopped back and forth a little bit in the position here. It's a little too choppy for being bearish butterfly expiration guidelines at this point. So here on Friday, the market chopped back up again. we're minus 715 delta. We only allow minus 500, and then when we do cut it back to the end of the day, usually it's closer to the 250 level. So what we're going to do is go ahead and sell off these 10 butterflies here. Brings us to about minus 237. Puts us in a position that looks like that. We had a continued up move on Monday. Put us way over our maximum negative delta number. Realistically, 4 days to expiration, having a tough month, getting chopped back and forth like this, many reasons to exit the trade here at this point. However, like I said, we continued to fight the good fight here for you guys. One of the things here is normally what's going to happen is we're going to add 1280 butterflies in. I have this issue with time value where I only have 95 cents. Normally I'm not going to buy a butterfly at 1280 for the 95-cent time value thing. So we figured we'd show you some of the things that we do coming into expiration here to deal with something like that. And one of them is to go ahead in and do 12, instead of doing the butterflies at 1280, I'll buy the long strikes at 1230 where I would have bought them anyway, and I'll just do a vertical here and sell off our 1270s where I can actually sell some time value. So I went ahead and I did 10 of those, and let's see if that's the only thing I did. I may have done a couple other things too. Yeah, so I did 10 of those verticals here, 1230, 1270, and I sold off 4 of these 1240 butterflies to bring us back down into the minus 257 area. If we look, there was nothing to be done. No, there was something to be done on Tuesday, so let's take a look at Tuesday here. Again, we're over our minus 500 delta limit, and we want to get down to around minus 250 area. So that's going to require selling off some of these butterflies here. I actually have some time value up here, so what I'm going to do is I'm going to buy back these 1270s. I'll sell, instead of selling 10, I'm going to sell 20. I'll add in the other side of the butterfly here, and then I'll start adding in or doing the same process I did with the verticals here at 1250, 1280. So if we take a look at what that actually looks like, you can see we sold off the butterflies at 1240. We sold the others. We rolled these 1270s to 1280, sold off an extra 10, covered ourselves to the upside by buying 10. So now we're in 2 sets of butterflies at 1260 and 1280. Normally I'd be buying 1,300 butterflies. I have no time value. Realistically, for time value, I'd only be selling the 1280s. So I buy my long strikes where I would have, and I sell 3 1280s, bring myself down to minus 268 in a position that looks like that. So that's what we would do there. Following day, again, we get chopped back to the downside again. And it turns out the market was just too darn choppy for us here. So I sold off these 3 verticals. I sold off some of these upper butterflies. If we move forward, those 3 verticals are gone. 3 of the butterflies are gone. Puts us down to positive 247. And then on the following day, we were able to exit this thing if I put it forward. But even again, a decent sized up move here. But we were able to exit this on expiration day for a loss of $1,100, which is very reasonable considering the type of month we had. Very, very challenging month there. So that was the last 2 weeks on the Bearish Butterfly, and I know that was complicated. Let me just show you the T-log on that before we go to the M3 trade. So here is the T-log. Didn't get too complicated here until July into expiration. We had definitely a lot of jockeying around here. So that is that's what that looks like. So let's go to the bearish M3 for July. This position here looked like this. We're essentially, I think we were in a broken wing to the upside here because we had to control some gamma trend. I don't remember exactly how we got there, but this is what we look like on Monday, July 6th. We did not have a delta issue, but we did have, is we were very close to our short strikes. So in the interest of a little bit of variety, since our rock trade was in the exact same position this was in, I decided to do something different with this one. So what I did is I rolled back here at 1240 because this is really a gray area. You could roll back, you could leave it alone. So I rolled this back 30 points to 1210 and I put some verticals in. Right, so our lower spread moved back to 1210 and then I had 1210, 1240 verticals gives us 39 positive delta. Position that looks like this. Very nice if the market takes off. Going to be a little bit sensitive to volatility, which you'll see with the upcoming down move. So if we go to Wednesday, right, got hit down pretty hard here. We actually were 21 points at the end of the day. We're obviously way over our positive delta limits here. We are also fairly far from our short strikes. So I wouldn't necessarily want to roll the whole thing down. So what we do is we just roll down the upper wing. So you see we moved these 1240s back to 1220. We also moved in the upper long to shorten that wing up to give us a delta of just within limits, positive 41. And a position that looks like this. We have a reasonable gamma trend. We have some reasonable downside room here. And of course, this is looking pretty nice. So moving ahead here, there was nothing done on Thursday, but Friday, the market decided to blast off like a rocket ship, right? So we are minus 109 delta. We are plus $483. Obviously need to make an adjustment here because we're outside the tent. So what I end up doing is essentially just rolling this whole position up a little bit. We took the lower wing up to 1220 and we kept our short wing a little short to the upside and we had 10, 12, 20, 12, 40 verticals in here. Gives us about minus 58 delta and a position that looks like this. So fairly nice looking position here. Moving forward to Monday, we had a continued up move. Now by now, our up moves are getting fairly aggressive here, and realistically, 4 days to expiration, we're in an aggressive uptrending market. A lot of times, I'll just say, you know what, I've had enough, and just kind of let this thing go. So I could have either closed the position or I just decided to let this run out. I bought back 3 1220, 1260 verticals. Gives us the opportunity if the market comes back to make money, but realistically, it's probably going to keep going under these conditions. So this position is perfectly fine here. We get the following day on Tuesday, right? Another $7. Again, weight positive Vega. Our delta is not good. Our delta is actually positive here, but Vega is not good. Theta is really low. It's actually quite negative. So again, just you know what? Let it go. Close out these 7 verticals here at 1260 and 1220. Sell off the call and just expire it at this loss number here of about $260. So that's what we did. We just let it expire there, and that was the July trade. So small loss in the Bearish Butterfly, small loss in the July M3. If we move to our next July trade, which is the rock trade, this position should look familiar because it's pretty much identical to what the M3 trade was. However, this being a rock trade, I usually allow a bit of a gamma trend issue with rock trades. with M3s in the rock trade system. I usually allow myself to get past the short strike with M3s in the rock trade system. In other words, because we have the capability of making more money here, we are a little more open to letting it draw down a little bit. So this particular trade here, we left it. There's really no here. I mean, like I said, we have a bit of a gamma trend issue that, again, is allowed. And realistically, we don't have too much of an issue to the downside. So with this here, nothing on Monday, nothing on Tuesday, right? Realistically, not a bad day to exit this trade, but rock trade I'm usually going to stay in. Let's see here. Go to Wednesday. We had our big down move with our big volatility increase. Now is a decent time to roll this back. So I came in here and rolled this back, I believe 20 points. Let's see. Yep, rolled it back 20 points, added verticals. 2 verticals here, maintained about positive 37 delta, and went into a position that looks like this. Again, I have a bit of a gamma trend issue, but that is allowed in a rock trade because if the market really takes off up there, we're going to be swapping over to something more aggressive anyway. So let's move this to Thursday. Yeah, no adjustments Thursday. Let's go into Friday. Here's what the position was like prior to adjustment. We are obviously too high of a negative delta. All we did is we added some verticals here, 1220, 1240, and 1230, 1240. If I bring that forward, typical M3 type of moves here, right? Starting to flatten out our upside. We go into Monday, and the market takes off again. We have a Vega issue, we have a Delta issue. We're not 10 points past our long strike, but we're certainly high enough and close enough expiration to consider going into a rock position, which is what I did. I switched this over to butterflies at 1240. Now, normally in a rock trade, I would be doing butterflies at 1240, and then I would be doing butterflies at 1280. Here, I don't have a ton of time value at 1280. So rather than, and usually I'll do the 1280 on the call side too, the butterfly. So, but rather than doing that, I'm just going to show you some things we do close to expiration, like we do with the Bearish Butterfly. Normally, if I did a 1280 butterfly here, I would have my long strikes at 1230, and I would sell the 1280s. Lack of time value. It's not that bad. I mean, I could have done the 1280s. It's about the minimum I would consider doing it, though. So instead, what I did is I sold the 1270s in the form of vertical, and that wasn't enough of a delta correction either, so I did 2 more 1250, 1270s, ended up in a position that looks like this. If you look at the chart looks very much like a rock trade. It's just configured a little bit differently under the hood, as they say. So that was that. Tuesday, we got a continued up move. Our delta was too high. I'm getting a little more time value at the 1280 now. So I went ahead and bought back some 1270s, sold some 1280s to deal with that. So let's just show you that. Right, brings us to about minus 180 delta, which is our delta point here. Gives you a position that looks like this. Eventually, if the market kept going, we would eventually have something that looks a little bit more like a rock trade here. But we're just pushing into this level as, like I said, and we're selling time value where it allows us to do so. All right, so from here, Wednesday, there were no adjustments, right? And we were in a position that looked like this. And then, of course, on Tuesday, the market was back up in here again, and I ended up being able to take a small profit on this. If we go to our reports, well, here we are here. So about 3,900, it's showing. That is actually a bogus number. After closing, we had a profit here of 29.22. So about a 5 or 6% profit here on the rock trade, so that's not too bad. And that was the July rock trade. The July V Condor, well, that gets much simpler. We did have a couple moves in there, so let's just go back to 714. We'll go back to 713 because that's what we have here. July V Condor. This is what we were looking like at that point, obviously right in the middle of the V here. If this gets to positive 50 delta, I'm allowed to pull the straddle out or at least widen it, and that's what we did. If you go to the following day, on the 14th, we're over our maximum delta number within the straddle. Right, again, the position looks like this. Therefore, we are simply going to pull the straddle out of there and then proceed to expire this trade at a profit of 1379. And that was the V trade for July. Other trades we had on. August Bearish Butterfly. Let's take a look at that. The August Bearish Butterfly actually had no adjustments. And if we go to end of day Tuesday, was up $8,900 and looked like this. So this is looking quite nicely. This is the point where a lot of traders who are more advanced do convert this into an M3. By guidelines, though, we're just doing the guidelines trade here. If it takes off to the upside, we'll just continue with the Bearish Butterfly rules. But it's just not uncommon for that. Also, one of the things I will often do here is if we pull over $10,000 profit and loss, 1/3 entered, usually I'll pull the trade off. It's 100% of capital in the trade, and 20% of planned capital. That's a good number for that. That's really pushing the trade. So to try and push it past that, especially for beginners, you're just pushing your luck there. So I'll usually go ahead and pull this off at a $10,000 profit. We'll see how that goes. As far as the August M3, we actually had to do a rollback to this on the 6th. So a lot of people actually are already out of their August trades at profit target this month. I don't know why. I don't know if I was aggressive to the upside here or what. I'm not sure exactly what happened. Or just a timing thing. People may have entered it at a different time. Most people are doing better than this, but this particular trade, again, exactly by guidelines within the program, definitely needed a rollback here. So I went ahead and rolled this back because we were past the short strikes. Now, if you're one of the M3 traders who are using delta limits, maybe didn't necessarily need to do that, but definitely I would be rolling this back here. So we simply roll back to a 1220 strikes. New position looks like this. And the other adjustment to this was on the 16th. Let's take a look at 716. We were just barely hitting our maximum positive delta here. Again, this is another borderline thing that we probably could have left it, but this was a gray area call and it was a wrong call to do this. And we went ahead, then we're going to make sure it's in there anyway. So here we are. And even this was an aggressive trade adjustment too, because I'm going even flatter delta than I normally do. So that is what the position looked like there. And then if we come to today, right, this is up a little bit, about $867. And that is what we look like. So the M3 trade for August is actually looking very good. August V Condor, that trade is giving us a bit of trouble this month. If I come back to 7.6, here is our August V Condor. I had to buy back on this day another one of these puts to bring us down under 50 down to about 25 positive delta. This is not good for this trade. It makes it hard to actually win anything unless the market really takes off to the upside and creeps up into here, which is basically what it has been doing most of the time when this happens. But as of right now, as of the 6th, that's what that looked like. Then on the 14th, we actually hit our positive delta number to remove the straddle. To move the straddle, I should say. However, I tried various combinations of moving and I couldn't hit my positive 25 delta number that I wanted necessarily. So I pulled out the straddle completely. And if all goes well and we don't have to buy anything else back to the downside, this should come in and expire at about a $1,100 profit. So it kind of beat the trade up for the month, but not the end of the world, as they say. We'll see how that goes. Again, that trade's been performing really very good this year in general anyway. Speaking of the V Condor, I did do a V Condor September entry, and that wouldn't have been there. That would have been after July expired. So I think it was this Friday. Went ahead and sold our 1320s, sold our 1190s, and 10-point vertical, 30-point vertical, 30-point wings. Added our straddle here at 1250. Gives us a picture that looks like that. And that was our entry on the 17th on the September V Condor. And last but not least is we had an entry on our rock trade on today for August. And this is what I did for an August rock trade right here. We entered 1230 butterflies, 10 of those, 5 1270s, and are exactly minus 180 delta. That is like perfect. And this is what the position looks like here. So we're off to the races with this one. And that is all we have. Again, I apologize for not being able to record the actual webinar. That was my fault completely. I just forgot to hit the record button, a little rusty from being away for a week. But we will be back Monday morning, 9 a.m. for the live webinar next week. And until then, happy trading, everybody, and we'll talk to you soon.